All right, in this video, I want to demonstrate the difference between LIFO and FIFO, and we're going to use a hypothetical set of products Amazon does, and then we'll look at what they say in their 10K. All right, so Amazon, a crate of American flag poles consists of 12 boxes of flagpole kits that Amazon buys from suppliers in Vietnam. I just bought one of these, by the way, $89, and it comes in 6 sections. It's a 25-foot flagpole with American flag. Anyway, during May, Amazon bought 8 crates of flagpoles at various prices. Okay, and each flagpole sells at retail for $100. I paid $89, but it's easier to do it at $100 because then we can do the example easier. So this first crate they bought on May the 1st, if there's 12 flagpoles in a box, then 600 divided by 12 means they paid $50 per flag. Okay, this next crate that they bought on May 7th, if it's $612 divided by 12 flagpoles, I paid $51 per flagpole. And here, they paid a pretty penny here. That'd be $636 divided by 12. So you can see from here that they pay a different amount for each of the crates of flagpoles. And so now that gives us a grand total of flagpoles they purchased that they're going to sell to other people during May of $4,752. All right. Now, I already went and did all these calculations. Let's start looking at how they would do this if they were doing LIFO or FIFO. LIFO is last in, first out. That means that the last in, these last 2 crates, would be the first that they sell. If they're selling 2 crates of flagpoles, under LIFO, they pick the last ones that they bought. Now, that's not how they physically do it. How they physically do it is these things are stacked up in warehouses around the country, and a robot goes out there and grabs one. Without getting into the weeds on this, we don't care how they actually do it. We care about how they account for it. If they were using LIFO, they would simply take 2 crates worth from the last bunch they sold, and that's what they would report as the cost of goods sold. If they were doing FIFO, that's first in, first out, they would assume that they sold these 2 crates worth of flagpoles. All right. So the first time they did this, they sell 2 crates. Under LIFO, the total cost of the goods sold would be $11.76. It would be $12.12 under FIFO. And then they sell 3 more crates. If they sold 3 more crates, going last in, first out, they already took those 2. And those 2 are no longer available for sale because they already sold them. So they'd go grab the next 3 boxes, or the accountants would. And that's what would come off of there. All right. So when we're doing LIFO, we just go backwards, or picking it from the bottom of the stack. FIFO, we're taking it from the top of the stack. Okay, and you can see that there's a difference in the remaining inventory. All right, now the remaining inventory would be, you had $4,752 worth. If you sold $11.76, the remaining inventory would be $4,752 minus $11.76. If you're doing LIFO, if you're doing FIFO, it would be $4,752 minus $12.12. All right, so let's hide this stuff for a second. How that would affect the income statement. All right, if you're doing LIFO, the revenue is going to be the same either way. They sell each flag is $100. There's 12 flags in a crate. So you sell a crate, that's $1,200. If you sell 2 crates, it's $2,400. The cost of goods sold under LIFO would be $1,176, which is the last 2 crates that were purchased. Under FIFO, it would be $1,212. That would be the first 2 crates up here. All right. In essence, what that means is your gross profit's going to be different, and your gross profit margin's going to be different depending on whether you're doing LIFO or FIFO. Your inventory is going to be different. All right. Once you've sold some of the inventory, remember they paid $47.52 for it, but now their remaining inventory, it's going to be different depending on which crates that you assume that you sold. By the way, Amazon, they're pretty good at this. They could keep track of exactly which crate they sold, but dang, they sell $300 billion worth of stuff, and you're worried about $2,400 of flagpoles? It's not really worth it. Let's say now they go out there and sell some more. The next 3 crates, they would pick the next 3 crates from this 3 going LIFO. They're going last in, first out. And from FIFO, they would be the first 2 they sold, and then they sold the next 3. All right. So again, you get a different number in there. And bottom line, what that means is whether you're using LIFO or FIFO, you're going to get a different gross profit margin because you have a different cost of goods sold. Okay, it's accounting. Let's go look and see what Amazon actually does. All right, this is from the 2019 calendar year 10K statement that they filed in early 2020. Inventories consisting of products available for sale are primarily accounted for using the first in, first out method and are valued at the lower of cost and net realizable value. All right, lower of cost or net realizable value, if they couldn't sell the darn things, if they couldn't sell them for $100 each and they had to sell them for $10 each to some wholesaler, then they would reduce the value of the inventory. But in this case, the lower of cost or market, the market price $100 a flagpole, and so they would use the actual cost because it's lower than the realizable value. All right. The other thing is this valuation requires us to make judgments based on currently available information and the likely method of disposition, such as through sales to individual customers. Okay, that's the normal guess. Yeah, we bought this crap and we think we can sell it. Returns to product vendors. Oh, we opened the flagpoles, they had 51 stars on them. We needed to send them back. That would be returns to product vendors. Or liquidations and expected recoverables from disposition. Nobody's buying our flagpoles, so we had to sell them to, the Dollar General Warehouse or whatever. All right, so another interesting thing in here, we provide fulfillment by Amazon services in connection with certain of our sellers programs. Amazon, about half their sales are third-party vendor sales. That means somebody else is selling their product through Amazon's website. All right, so fulfillment by Amazon services is the warehouse and delivery services. Third-party sellers maintain ownership of their inventory. That means that even if they put it in Amazon's warehouses, the third-party vendor still owns it. So Amazon does not report that in their inventory. It still belongs to somebody else. Amazon is just getting a finder's fee for selling it over their website, and they charge them a fee if they're going to store it in the warehouse and then ship it for them. All right. So again, about half of Amazon sales are stuff owned by other people. All right, so to recap, there's a difference between LIFO and FIFO in inventory valuation and cost of goods sold. It is good to know that, and it's good to know what LIFO and FIFO stand for. LIFO, last in, first out. All right, what that means is they brought all these boxes in here. When they start selling them, they assume they're going to sell the ones that came in last, or the last ones that came in, or what they're going to sell next. Okay, as opposed to FIFO, which is first in, first out. And what that means is that whatever we got first is what we're going to sell next. So as they sell the crates, they assume that they start with the ones they bought on May 1st, May 7th, May 10th, and those are the first ones they sell. In this day and age of computerization and automated tracking, a company like Amazon can tell exactly which of these flags that they sold. But accounting systems don't really have much to do with how you physically transfer the stuff. It's how you can report this stuff to independent parties in the 10K. That's what financial accounting is all about. Is how do we report this stuff to other people? All right, that's a fast and dirty LIFO and FIFO and why it's important.